presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. We're going to be joined today by Basil, Chapman, and Tim Ord, so make sure you stick it through the episode. It is going to be good. Obviously SPY up 0.63%, Composite up 1.19, trading at 90,623. Some strong movement right there. Dow Jones Industrial up 0.33% at 44,567, and the Russell futures up about 1.18. But I really kind of want to talk about right now is the earnings, because we're going to have the guests on today, and I want to make sure I don't cut into their time. Of course, the Palantir play did phenomenally yesterday. I mean, how about that, right? So trading up 23% right now. Basically, enterprise growth accelerated, I think about 60%, right? And that's what we had always been kind of looking at with Palantir. Of course, them supporting the Maven system was huge, and that gives a really nice foundation. But in reality, spreading into enterprise is really where a lot of the money is. It seems like enterprise has been doing so. You trade to a high there of 106.91, trading right now at 103.10, up 23.12%. Quite resilient. Especially consider the valuation, now you're trading at the PE of 515, and we were trading about roughly 174 billion market cap, and now we're at 224. Of course, we were in Palantir, which did phenomenally, up 45%. Definitely, hard to stick in some of these that long, these leverage ETFs. As far as other earnings today, I'm thinking, of course, we have Google coming out, you have AMD. Spotify did very well. I'm not very convinced on either of these right now. AMD, I think, their whole argument is that they're better for inference, but I don't know if that's necessarily true. And Jensen Huang has been speaking about inference so much recently, and it would be very surprising to me if NVIDIA had not tried to work something out with that already. So we'll see what happens with AMD, but I'm not really sold on it. And then Google as well. I think the fear that I have with Google is that it's going to suffer the same fate that Microsoft did, right? Where you're going to have these contracting kind of, just basically cloud growth. I mean, if you look at Microsoft in the wake of massive CapEx, right? Okay, so you look at Microsoft, you get some big movement right here, right, on earnings. And not do very well. Meta beat them. I think the same is going to be it's going to be the same for Google, essentially, right? I think you're going to have decreased cloud growth. I think people are going to be freaking out. I think the only catalyst that exists for Google right now, like the only delta that exists, is with the agentic AI, right? Now, of course, that will increase cloud usage, right, over some period of time. But I think we're very nascent still with agentic AI. One of the major kind of benefits that Google enjoys is that they use TPUs, and these are built by them, and only they use them, right? And if you remember what we were talking about with DeepSeek, one of the things that was really phenomenal about it is that it used floating point 8, okay? And you can really, you get a lot more from your energy input, even if it weren't as accurate. Agentic AIs do not need to be super accurate. They do not need to do a bunch of math. They don't need to model out a bunch of things. They just need to kind of know what you're asking it and then do it, right? And I have a friend who owns a business in St. Petersburg, and I was speaking with him about all of this the other day, and they're using, I forget what ChatGPT's agentic AI is called, but they were having it basically look at orders and put it into a spreadsheet. It's amazing what this thing can do, or what agentic AI can do in general. So, we're kind of looking at forward guidance for Google. I am pretty much neutral on this right now. If they have contracting cloud growth increasing CapEx, and it's not really clear when agentic AI starts making them a decent amount of money. I think you can have a bad kind of reaction to this report. Now, I think 2025 for Google in general, and Microsoft in general, and Amazon is going to be great. I really do think it'll be nice for them. But just right now, this quarter, I'm a little bit hesitant to try to take any position. And AMD, I think time and time again, has just kind of proven itself to not be the right decision. And I don't think that just because we're entering into inference and AMD's leadership says they're better than NVIDIA in inference, which again, I probably disagree with, I stay away from that right now. So anyways, let's move on a little bit as well. We have the DXY trading at 107.95. You have crude oil off about 0.82% at 72.56. Gold contracts still relatively strong at 0.57% at 2,873. Copper up about 1.37%, trading at $4.36. And you get some of the bonds moving to the upside as well. Something interesting that I'm looking at with bonds and gold to some extent is going to be that sovereign wealth fund that Trump is putting together. If you look at some of the compositions of sovereign wealth funds, Saudi Arabia is relatively diversified. Same with the Norwegians, of course. The Norwegians and the Saudis carry a lot of treasury bills in the US. And so in some strange way, I think that Trump is going to achieve quantitative easing through developing this sovereign wealth fund and buying a ton of bonds. I don't know where that money is going to come from, if they're going to try to leverage some stuff on the balance sheet, such as land or maybe just cash that exists. I'm not really clear on that, and I don't think anyone necessarily is right now. But I mean, if that's the case, I mean, you buy bonds, right? I mean, these would skyrocket and stuff. So it's something kind of interesting to keep in mind. I think as more discussion comes out from the executive branch on what investments in that fund would look like, it'll become, of course, more clear. Of course, he said he was going to add TikTok to it. I'm not really sure what that means, how you would buy TikTok and put it in the sovereign wealth fund. Unless he's talking about nationalizing TikTok, which would certainly be interesting. And of course, Bitcoin. That's a big conversation as well. You have some of the guys standing around him while he was signing this who are very pro Bitcoin. You have a lot of crypto guys right now arguing for banks to be able to use crypto and offer those kind of services. So we're living in a very strange time right now, certainly economically speaking, and in the market as well. I think right now taking a position either way on everything I just kind of listed is a little bit premature. And I think as these earnings come out with Google, certainly with AMD forward guidance wise, and then what Trump wants to do with the sovereign wealth fund will become a little bit more clear. But stay right there, folks. We'll be right back with Basil Chapman right after this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Now, every Tuesday, we are joined by Basil Chapman. Basil Chapman is the author of the Opening Call newsletter. Strongly recommend checking this out. It is very thorough. I think even today, he was looking at some certain stocks that I had been looking at for a while as well. And it's always interesting just to kind of get other people's opinion, especially when they've been in the game this long. It is fantastic. Additionally, he does I believe an hour long, he can correct me if I'm incorrect, an hour-long video every Friday or Saturday. And again, that value added is massive. So I strongly recommend checking this out. Additionally, he has subscriber-only webinars. The last one he did was November 14th. And that was about sector rotations, sector and stocks for the next market phase. Strongly recommend checking that out. If you haven't already, you can do so risk-free with a 30-day money-back guarantee on all of our newsletters. So you can try to check this out. For whatever reason it doesn't work for you, you can get your money back, but we're betting that it will. Basil, how are you doing?
Sounding terrible, but I'm actually doing quite well. Thank you.
Fantastic. I am sorry to hear that, Basil, but thank you for coming on nonetheless.
Pleasure. So I'm looking at the Dow, as always. We always do the Dow, and it's very interesting.
Basil,
people say to me, "Well, why do you use the Dow and you don't use the other?" I use all the indices, but for decades, every day I've made a call on the Dow, so I'm just kind of familiar with it. But look, in fact, why don't I do this right now?
Basil, we're not seeing your charts right now if you're sharing them.
Oh, no. Really? I thought I had done it. All right, give me 1 second.
No problem.
I'll be right there. I thought I was all set. Let me do it. It takes me 1 moment. No, I thought... I didn't see it. Okay, here we go.
A lot of moving parts. I know. I do the same thing.
Yeah. Okay, there we go. 1, 2, 3. There you are. Okay.
Perfect deal.
Got my charts, right?
Yep, fantastic.
So I just expanded. These 3 white charts right here, this little rectangle, I do every day. I send out to my subscribers. I discuss exactly what we're looking at based on the Dow Daily. This is the Dow Daily as well in the middle. And there's a 120-minute chart on the right. And you can see here, there's this beautiful cup formation. We added to our long positions in the Dow right at the low at 41,844. Kind of small aggressive position, taking little bits off. And then on Friday, I thought, this is again to go to the leg D in the Chapman Wave methodology. And of course, I've lost it, but it's right here. In the Chapman, we're always looking for identify the lowest low bar and count the peaks as they rise, uppercase letters, A, B, C, D, E, F, G on the way up, lowercase on the way down. But it's if you surpass A and you go to leg B and you get an upgrade in the technicals from a buy signal to a buy mode, it says you should go to at least a peak D and then other things can happen. Well, where did we go? We were in leg D on Thursday, and I anticipated on Friday that we could get some kind of a setback because of the 45,073 high on December the 4th. And what happened is we did get that. I wasn't able to do Friday's show. I was out of town. But we had a reversal. It was doing so nicely, and then there was the discussion about tariffs. So what happened is Friday was a very ugly candle, and then over the weekend there was all this talk, and there wasn't a single news channel that didn't talk about tariffs and how you're going to pay, 300%, whatever it was, more for whatever. But I said, this is the 9 period. My technicals were so strong, I couldn't do anything else but to say, I will take a little insurance on Monday for subscribers, but we want to stay in our long positions. So I have to look at this as if you finally got to that peak D, but was this an interruption of a move that was continuing to the upside? Well, so far the technicals suggest yes, that's number one. Secondly, people say, why the Dow? Well, look, the charts. Look, this is the Dow, this is the S&P, this is the NDX 100, this is the SMHs, and this is the IWM, the small caps. Which is the strongest chart right here? This is the weekly chart. Look at those green candles. That's the Dow. So this is, you identified this correctly when you said earlier on, this is becoming very selective. So as selectivity continues, I said to subscribers, we are in lovely positions. We're in the AI. We're in the broker dealer sector with Robinhood. We're in just at this point areas that are holding very well. And so one of the sectors that we're in is, if I go to gold, you'll see that gold has had an absolutely fabulous move. There's another leg D. So D says you got to be a little bit careful. Yeah, other things can happen. But if you look at the weekly chart, there's a breakout to an all-time high in leg C. If you look at the monthly chart, it's a leg D. So we are in PHYS. That's the physical gold. It trades just the same as the gold contract. It's the spot physical gold. Leg E in the monthly chart, leg C in the weekly chart. And look at this. So we went long just after the low of the 15th at 19.63, the very next session. And we survived that big arch formation with the retest. And now what's happened is that the 9-period moving average is very strong over the 14, but the price is getting a little extended based on my Chapman wave notation to D. So I'm anticipating you've got the on-balance volume for the first time becoming rather overbought. But I don't see anything other than a pullback. So I'm anticipating it sometime very soon. You usually get little dogs chasing one another. It's the gold leads, and silver wakes up and says, hey, where's my gold? And it follows gold, and then it stalls, and then gold comes back, and then silver moves. So now I think silver's going to play a little bit of catch-up. But most importantly, I think for this week, I had said, let's see how Monday and Tuesday go without getting too excited about anything. We've got our positions. We got stopped out of a couple of things that I had tight stops, but I just have to have stops for subscribers, even though I really like them. For instance, Uber has earnings coming out.
Yes.
We got Uber, and the very next day, Musk talks about his robo-car taxis, etc.
Right.
So we got smacked down. It's still looking good. Look, the 9-period moving average is that green line is holding beautifully, even though the price. So I don't know what's going to happen. We aren't in it right now. I'm upset because I want to get right back in, but we didn't do that. But you can see. So what I've done is I did all the notation for stocks that I like. Some of them we don't have. Some of them we are waiting to get. And I think this is a point where I'd say that during the first few days of this week, if the stocks that you have are holding really well, that's where the money's going.
Yes.
Because otherwise they're just failing.
That's right.
Excuse me. But there is a new sector. There are a couple of sectors that are just starting to wake up. And that's what I want for subscribers, is as these new sectors are starting to wake up, it's so nice if you can get a low, even if it's not the low, but at least a low, because when the price moves up, and then you get that vicissitude, you get that springing motion up and down, very often it doesn't go back to that low point. So if you survive that, then you've got that whole upside. So this is a very interesting week coming up, week and a half, I'd say, in which positions that could possibly hold, even though there's going to be a really whippy 3 months, positions that can hold at least for a couple of months. And that's what we're kind of trying to look for right now.
Definitely. And Basil, it's unfortunate with Uber. I'm along Uber right now into earnings. At least on a fundamental basis, right? People are very worried about robo-taxi. we'll see if that materializes. But one thing I want to say...
It takes forever to materialize.
Forever. And I want to say as well, a stock that I'm in and I talk a lot about is NBIS or Nebius. They have their own kind of weird robo-taxi thing going on, just a small portion of the company. But they've actually made deals with Uber to deploy this technology if they so want to. So Uber has that kind of run up as well in that way to answer Tesla. But yes, I mean, this takes forever to allow cars just to drive themselves everywhere. Basil, thank you so much for joining us. Thank you so much, Basil. We'll see you tomorrow morning, okay? Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Schuker watching the Tom O'Brien Show. What Basil brought up is Uber. I believe they're having earnings. They're reporting earnings on Thursday. I'm in Uber. I do anticipate actually this slowdown in a lot of ways, right, was from the Waymo taxi and Tesla's autonomous taxi, saying that it basically cut into Uber's market share, and I don't agree. One, again, I think this horizon is very far out, at least another 4 or 5 years. And then additionally, even if it's not, right, I mean, Uber has this built-in kind of protection against this, which is making that partnership with AV Ride, right? And so they announced this in October, okay, of 2024, that they're going to bring in. AV Ride has autonomous robots and vehicles themselves that will deliver the food, deliver the passengers, and stuff like this, right? This, of course, is owned by Nebius, which is a stock that I am very long in. They have earnings coming up very soon. I cannot wait to see how they do. Their CEO spoke recently and said, I mean, the demand for just this compute is unbelievable. So he's saying, I mean, even going into Blackwell, these chips, even with DeepSeek, like the demand is just insatiable. And so you're going to see continued purchasing, at least on NVIDIA's end, or from NVIDIA, of GPUs. You're going to see continued demand from large cloud providers for this kind of AI compute. Nebius is trading up 3.99% right now. Every time this thing dips, more people buy. I still think we're priced so well at $6.9 billion. So really looking forward to seeing what earnings are like. Even here, I 5 days ago, AV Ride and Grubhub bring autonomous delivery robots to U.S. college campuses. I don't feel any type of way towards AV Ride as far as Nebi is concerned. I really think their major revenue drivers are going to be that compute, some of their generative AI that they host. Anyways, that's my kind of thing. But at least as far as Uber is concerned, they have this kind of padding, so it's not necessarily existential for them, right? And they're not dumping a bunch of money into developing it the way that Tesla and I believe Google is Waymo are, you know? So, I mean, it's almost even better. This probably just needs an optics check, I would say. We'll see what happens during earnings, but I'm bullish on earnings for Uber at least, so we'll see what happens. So every Tuesday, we also have our man Tim Ord on. If you go over to ord-oracle.com, you can check out what he's all about. You have the homepage here, you have newsletter and the book. Additionally, if you go over to the services tab, we have 2 fantastic webinars from him. That is a Secret Science of Market Tops. I would say this is definitely very important right now because everyone seems to be trying to call a top in the market. And then additionally, 6 secret ratios every trader should know. So strongly recommend checking those out. Tim, how are you doing?
Good. How you doing, too?
Doing
glad to be back.
Yeah, we're happy to have you back, Tim. Man, it's like every time, we see you last, something crazy happens in the market, right? I mean, we were on Thursday, and now we had tariff fear on Monday, and it seems we've kind of recovered. So, I'm just curious to see what you're looking at today. I know we usually talk gold and the market in general.
Right. Let's take a look at chart 1.
Sure.
And actually, this chart goes back to late 2018, and the top window is McClellan Oscillator. We actually covered this before in the past, and there's kind of 2 signals to this. It needs to get down below minus 300 to show capitulation, and it did that on December 20th, 2024. So obviously a little over a month ago. Then you need a rally. There's 2 different actually upside targets for major bottoms. It needs to go to minus 300 to plus 300 in a month. For minor bottoms, which I think this is, it needs to go to minus 300 to plus 200. And we did that on August or January 21st of 2025. So it's a month and 1 day, close enough. But we did have that. So the market is in a relatively good position. I like to actually see it go to 300, really confirm it, but 200 is probably good enough. I'll say probably, not 100%. It kind of lowers the odds, but we're still probably hitting 80%. So if it got to plus 300, it'd have been probably in the 90s, maybe 95, or really a high percentage. But we're still in a good position. So that's on the bigger term. So that says kind of an intermediate term trend is up, but not extremely strong, but still up. Let's go to chart 2.
Yep.
This we covered before. This is WAG breast thrust indicator, and we actually got a trigger. It went from has to go below the definition, which is the bottom window, is advancing issues over total issues with a 10-day average, and needs to go from 0.4 to 0.6 in 10 days or less. Well, it went from 0.4 to 0.4 to 0.6 in 10 days. This went from 0.41 to 0.61 in 6 days. So in general, that was triggered, and it is said that the Zwag breast thrust indicator only shows up in bull markets.
Okay.
So that did show up. So it adds to the bullish situation. Now let's go to a little bit shorter term here. Let's go to chart 3.
Yeah.
And this is kind of my bread and butter type things. You got to have capitulations. Right after capitulations, you got to have a sign of strength. And so Joe Granville, which is technicians back in my era, the 70s and 80s and part of the 90s, he always talked about the wall of worry. Mm-hmm. And that's how markets rally. They kind of go up on fear. If they go up on optimism, you're looking at a top. But if they go up on fear, usually that fear keeps the rally going. And I really can never define what fear meant. Well, I did come up with the trend readings of 1.2 or higher, shows there's fear in the market. And so I have a 3-day, a 2-day, and actually the top one is a 10-day. Anything above 1.2 on a daily basis shows fear. So if you get 3 days, that's better than 1 day. If you get 2 days, that's less than 3-day fear. But the ideal number is 10 days. That's 2 weeks of fear in the market. If you get that up around 1.2, normally you got a trend going. And trend could be multi-weeks, maybe multi-months. Could be a long time. We don't have that here, but we do have the 3-day and 2-day trend, both well above 1.2. The 1 day is kind of irrelevant. Yesterday was 103, but the day before I think was 1.3. So, but anyhow, the 2 and 3 days are in bullish situations, I guess you might say. So there's chance at the current rally, we got enough fear in it to maybe push it up again, at least against the previous highs, and maybe a little bit more. But we don't have the 10-day in an ideal situation here. So I'll hold.
Yeah, please, Tim, stay right there. Folks, we'll be right back with Tim right after this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. I'm joined right now by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. Tim, before we go on, I just saw over the break that the Chicago Board Options Exchange is now going to be open 24 hours. So we might have to do a late night TFNN show at some point. Also, wow. Yeah, I know, right? I think the NYSE is extending 22 is going to file permission for that. So we'll never be able to sleep. How does that sound?
I'm not sure. I was looking forward to that. So.
Yeah. Before you went to the break, you were saying that
weird stuff can happen in the middle of the night.
I know. It'll be very strange to see how that works.
Yeah.
As far as the charts are concerned, you said something that the 10-day wasn't shaking out exactly to be bullish. Is that correct?
Right, yeah, 10-day, we're on chart 3, the top window's the 10-day, and we're coming in 107, you know, and I marked the times when the 10-day is 1.2 or higher, and they all came, you know, near lows or during rallies and stuff, and we got 107 right now as of yesterday's close, and you know, sometimes these trends go up as the market rallies, which is really a bullish combination. That's what we had back. If you look back in, looks like about January of 2024, we had something like that. And that bodes well for the intermediate term. And this month is actually January and parts of February are really important for the year. If both of January and February are kind of just flat, a lot of times, you know, they always say whatever January goes, so goes the year. And there's some truth to that. There's a lot of statistics to that. Mm-hmm. And this bullish period where the market should rally from basically January 20 or January 1st all the way into the first week of February, which we're in right now, should have the market up around 3%, and we're not quite there yet.
Okay.
And if we don't, that usually can flip the market sideways. So my opinion, this week is really important for the week to rally. If it doesn't, then it doesn't really spell trouble for the market, but it does take out quite a bit of the certainty that the market will be in an uptrend. I'll put it that way.
I see.
But anyhow, getting back to this 10-day trend, it's not ideal. It needs to be up around 1.2. So I'm kind of worried about intermediate term rally starting from here, unless I see that trend up around 1.2. So there's some caution. So let's flip to chart 4, see where we are right now. And there's some good things here. The shaded area in blue I have on that chart there is, I have a lot of different numbers there. I have trend and a lot of different numbers. And we got a bunch of trend readings all in the 1.2 area and higher. And that's actually bullish. And that's what I thought would happen, kind of building and pushing the trend up higher. It needs to get to 1.2, 1.07. It's not too bad, but ideally, the more panic you have, the more stronger the rally thereafter. And so we do have a big support area. All those trend readings, the reason why I put that in blue is that's where the panic happened. In other words, trend readings of 1.2 or higher, and that's a support area. And that's kind of a wide support area. It basically goes from 582 to around 600. And we may go down and visit this area again, but it's probably that's where the bottom of the market for this year is, in this vicinity. So how much higher can we go from here is the key thing. And that's why I'm seeing how high this rally can go that we're currently having.
Yeah.
I want this week to be up week just because it's a strong seasonality week. If we don't have a strong up week, I'm going to pull back some of my bullish horns. But this is Tuesday, so and the market's up today. If you look at the current volume on today's rally, it's pretty weak. And that's not ideal. And you had the last 2 days, not counting today, but yesterday and day before, you really had some decent volume to the downside. And volume goes in the direction of the trend. So you got some things wrong with it. And I don't know, the market just needs a bigger base forming here, which is a possibility, and build power for the next rally. In other words, go up, can't get going, come back down into this vicinity, and where the trend pops up again, to 1.2 area and higher, and build energy for the next rally up. That could happen. So I'm not for sure, but I'm long right now, staying long, because I don't see a huge reason to get out. If you look at the VIX, which is bottom window, it's actually down today with the market being up. And that's usually a good sign. If the S&Ps was up today and the VIX were up, I'd probably be out on the close today on the market. So not extremely bullish here. I am long. I don't see a big reason yet to get out. I think we'll get back to be last Friday's high at a minimum, which is up probably another % or so. And how that high is tested is going to be important to me. So kind of playing it safe. We had kind of 2 really big years in a row, last year and the year before.
Yes.
Up 25% or better both years. So we're kind of due for a rest here. So I'm kind of being careful. But anyhow, I'm long right now. We got time to hit the gold market.
Oh, yeah. And if you want to stay into the last segment as well, let's do it, because I know there's been a lot of moves in at least the spot price recently.
Yeah. Okay. Chart 5. I keep showing this chart because the bigger trends rule the smaller trends, and this is the monthly trend. It gave a buy signal back in May of 2024. Still on a buy signal. The buy signal is when the cumulative advanced decline and up-down volume close above the mid-Bollinger Band, which I pointed out on this chart. As long as they stay above the mid-Bollinger Band, trends up. We had a consolidation back into a recent low in early January, and since then both those indicators have turned up, which is bullish. So the longer-term trend is up. And chart, here's a chart 6. This is kind of important chart. It kind of dictates the intermediate term trend. It's like the 18-day average up-down volume bands decline indicator staying above 0. This indicator is the 50-day average of the up-down volume, and I just use the bottom window, which is the up-down volume. The advanced decline doesn't seem to work as well. But as long as this indicator is above 1, or above 0, is -1 right now, it's the intermediate term uptrend. It doesn't take out all the wiggles of the market, but get you in the main trend. And once this gets above 0, which actually it is right now, even though when I made this chart, it wasn't. But once it gets above 0, it usually stays there and really picks out the multi-month trends instead of the multi-week trends that other indicators have. And that's promising. So I think this year is going to be a pretty good year for gold issues. And this chart kind of reconfirms that. So this chart is turning bullish right now. And it's pretty trendy. So I marked the times in the past when this indicator was above 0 with the green areas on the chart. So if you can see, if you look back in 2019, it stayed above 0 for 16 months.
Right.
So this is probably, and I've been saying for quite a long time, or not a long time, but I'm thinking what the current rally is a multi-month, if not longer rally. So the next intermediate term rally, I think, is actually starting now, and I think it could possibly last into July and still be in a bull market, but bigger consolidation. I'll hold it for the last chart.
Yeah, please do, Tim. Folks, we'll be right back with Tim Ward right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. We are joined by Tim Ord of the Ord Oracle. You can visit his website at ord-oracle.com. We have a short segment here, Tim. Before we went to the break, we're looking at chart 6 on gold, and I think we have chart 7 up right now.
All right. Well, actually, let's go to chart 6 real quick.
Sure.
All right. This is a 50-day average of the up-down volume, GDX up-down volume, which is the bottom window. Okay. So that's a 50-day average. Now we can go to 7. And the bottom window on this chart is the 18-day average. So there's different averages here. So this is a shorter-term average. And this shows the short-term pattern. So on the 50-day average, you're looking at a bigger pattern that'd be a multi-month type rallies, which I think is developing here. And what this chart on chart number 7 is the short-term view of what's going on in the market, which is actually bullish. If you notice, both those bottom two indicators are hitting higher highs above the previous highs as the GDX is making higher highs. So there's no divergence here at all. So everything's still a go, I guess you might say, even on a short-term basis. And I'm thinking this is going to keep going up for a while. The reason why is on chart 6, the previous chart, the 50-day average is right smack at the 0 line. To get that above the 0 line, stay above the 0 line, you need the chart number 7 here to continue higher. if you get what I mean. You need more time to the upside to turn that 50-day up.
Yep.
So I'm thinking that's probably what's going to happen. So this rally that started in January here, it looks like early January, is probably going to go on for a while. Probably at least at a minimum, you're going to break above the previous highs up around 44 there and probably keep going. So I'm thinking this, not every day is going to be an up day. It's going to be more trending, but trends up short term and probably intermediate term.
Fantastic. We love to hear it, Tim. Tim, thank you so much for joining us. We'll see you Thursday.
All right. See you then. Thank you.
Folks, thank you so much for joining me today. We'll be joined tomorrow morning at 9 a.m. by Tommy O'Brien for the morning market kickoff. Hope you all have a fantastic evening. We'll see you then.